Welcome to the deep dive. We're here to unpack complex info, give you those key nuggets of knowledge, and help you feel really well informed. Today, we are plunging into the pretty dynamic world of defense technology. We're looking specifically at AeroVironment's latest financials and what they tell us about the future of autonomous systems, our mission, to figure out how AeroVironment is shifting, from just drones to this broad spectrum defense tech player, and crucially, what that means for global security going forward.
That's exactly right. We're digging into their Q4 and full fiscal year 2025 earnings transcript, the press release, some market analysis too. We'll break down the financials, yeah, but also the big strategic moves like acquisitions and some pretty groundbreaking new products. These aren't just changing the company. They're really shaping how defense itself evolves. So yeah, get ready. It's definitely more than just numbers.
Okay, let's start unpacking that transformation then. Fiscal year 2025 was record-breaking for AeroVironment. What were the standout numbers that sort of set the stage, and what do they really tell us?
Well, for the full fiscal year 25, total revenue hit $821 million. That's a solid 14% jump from the year before. And Q4 itself, that was really strong. Revenue soared 40% year over year, came in at $275 million. Performance like that, it led to record bookings for the whole year, $1.2 billion total. That shows really significant demand for their main stuff.
And the backlog, that's always a key indicator for what's coming down the pipe, right?
Absolutely. They ended FY25 with a funded backlog of $726 million, which is, get this, 82% higher than the previous year.
Wow, 82%.
Yeah, it signals really powerful momentum. And what's interesting is where it came from. Their loitering munitions system segment, that's where Switchblade lives, revenue there jumped an incredible 87% in Q4 alone.
87.
To $138 million. And for the full year, it was up 83% to $352 million. Even McCready Works, which is kind of their innovation engine, their R&D prototyping group, that grew revenue 24% in Q4.
Okay, that kind of consistent double-digit growth, especially in those key areas, it's not just good quarterly sales figures. Why should you, our listener, really pay attention to these specific numbers? And I mean, does growth like this bring its own challenges, like keeping up?
Yeah, you're right. It's definitely more than just sales. These figures really highlight the accelerating global demand for advanced defense tech. When you see growth like this, sustained growth, it tells you nations everywhere are actively investing, they're modernizing. It's driven by, geopolitics, but also a real shift in military thinking towards systems that are adaptable, autonomous, precise,
It
and
challenges.
challenges.
Oh, absolutely. Rapid growth always strains things, supply chains, finding the right people. But so far, AeroVironment seems to be delivering, suggesting they're managing those pressures, for now at least.
So that's the organic growth picture. Impressive. But then they made this, well, truly game-changing move, fundamentally reshapes the company. The acquisition of BlueHalo. What exactly does BlueHalo bring? How does it push AeroVironment beyond just, being the drone guys? Right, so the BlueHalo deal closed May 1st. So it wasn't really in the FY25 numbers we just talked about, apart from some deal costs. But make no mistake, this is a huge strategic pivot. It positions them as what they're calling a next-generation defense tech prime with an all-domain portfolio, meaning they're not just air anymore. They're aiming for land, sea, space, and cyber capability.
Full domain. Okay.
It's about becoming a much broader, more integrated provider of defense solutions. Really big step up.
So building out this much bigger defense ecosystem, how did that impact them financially? I mean, the structure of the company, and what kind of synergies are they actually expecting? Is that realistic?
Well, to pay for it, they took on debt. Paid off $925 million using a new $700 million loan and part of a $350 million credit line they have. If you look at it pro forma, like if BlueHalo had been part of the company all of FY25, the combined revenue would have been around $1.7 billion.
Okay, quite a jump.
Big jump. For fiscal 26, this coming year, they're projecting about $10 million in cost savings, synergies, mostly hitting in the second half of the year. But the move isn't just about cost savings. It's really about diversification, getting into these high-growth, high-priority defense areas, grabbing a bigger piece of that global market. The biggest challenge now, though, it's integrating these two pretty complex organizations smoothly to actually realize those long-term strategic wins. That's always tough.
Right. Integration is key. Now, speaking of broadening their reach, it's not just buying companies. Their own R&D labs have been busy. What new cutting-edge products did they roll out this past year? What makes them stand out?
Yeah, they launched 3 pretty significant new things, all tied to what customers are asking for. First, there's the P550. It's a new Group 2 UAS uncrewed aircraft system that's AI-driven, autonomous, uses a modular open system approach.
Modular open system.
Yeah.
Oh,
Yeah, meaning it's easier to upgrade and integrate. They think it could lead the small UAS industry. And there's a big U.S. Army decision coming up for it, a program of record potentially worth around $1 billion, expected in the next 6 months or so.
$1 billion. Wow. Okay, what else?
Second, the JUMP-20X. It's a VTOL vertical takeoff and landing medium UAS, specifically engineered for operating off ships. It just snagged a $46 million contract with Italy's Ministry of Defense. So clear international interest there, too.
And the third one, Red Dragon. Sounds pretty intriguing. What is that exactly, and what's its potential strategically?
Yeah, Red Dragon. It's a fully autonomous one-way attack drone, designed to work even if GPS is jammed or unavailable. Key points here.
Yeah.
Mass production, affordability, and deployable on land or sea. And here's a really interesting part. The base model has fewer ITAR restrictions.
Outar.
The export rule. Exactly. International traffic and arms regulations. Strict U.S. rules on exporting defense gear. Fewer restrictions mean it's much easier to sell internationally. Management thinks the market for this kind of drone could be equal, if not bigger, than even loitering munitions as a whole.
Bigger than Switchblade's market.
That's what they're suggesting. Well over $1 billion. And this isn't just about sales numbers. It signals a shift, maybe, towards more decentralized, accessible attack capabilities. It could, change the game for smaller nations, give them access to advanced tech they couldn't get before.
Interesting implications there. And their existing lines, like the famous Switchblade, they're still seeing huge demand, right? Making big moves.
Oh, absolutely. Switchblade is still a powerhouse. The portfolio landed a nearly $1 billion 5-year sole source contract with the U.S. Army.
Sole source, meaning no competition.
Right. An IDIQ, indefinite delivery, indefinite quantity, allows the Army to order as needed over 5 years. It's the largest contract in the company's history. Plus, they got $250 million in Switchblade orders from 8 different countries just in FY25. And another 8 allies are in active talks for foreign military sales.
So the demand is just massive.
It's huge. And to meet it, they are aggressively expanding manufacturing in Utah. The goal is to support over $1 billion in annual Switchblade revenue. The big question, though, the critical question is, how fast can they really ramp up? Can the supply chain actually meet this overwhelming global demand without hitting major bottlenecks?
Always the challenge with rapid scale-up. Okay, so looking ahead then. Fiscal year 2026, BlueHalo is now fully in the mix. What's the company's vision? What's the financial guidance? How does this reflect that new strategic direction?
Right, for FY26, they're projecting revenue between $1.9 billion and $2.0 billion. That's that massive jump, reflecting BlueHalo plus continued organic growth. Adjusted EBITDA, that key profit measure, is forecast between $300 and $320 million. And adjusted earnings per share between $2 and $3. What's really noteworthy is their confidence level. They say they have 70% visibility to the midpoint of that revenue guidance.
70%, that's quite high, isn't it?
It is. It's at the higher end of their usual range. Signals strong confidence in hitting those numbers.
And how do the new business segments, post BlueHalo, fit into this future picture?
Good question. Starting FY26, they'll report under 2 main segments. First is autonomous systems. That covers basically all the uncrewed stuff, UAS, precision strike like Switchblade, the new one-way attack drones, counter-drone tech, robotics. Expected revenue there is $1.2 to $1.4 billion.
Okay, the bulk of it currently.
Yeah. The second segment is space, cyber, and directed energy. That's where the BlueHalo capabilities really come. In space tech, directed energy weapons, cyber solutions. Revenue projected there is $700 to $900 million. So this new structure clearly maps out their expanded capabilities. It's also interesting their international focus. In FY25, 52% of revenue was international.
Over half.
Yeah. And European customers, not including Ukraine, were over 24% of that. Now, Ukraine revenue is expected to drop significantly in FY26, but they see strong growth in other international markets kind of balancing that out. And they're deliberately boosting capital spending, planning another factory just for Switchblade to meet all that future demand we talked about.
Okay, this all clearly lines up with major global defense trends. But considering this huge growth, the big acquisition, what are the biggest hurdles you see? Or maybe long-term competitive threats in this space? It's evolving so fast. And sort of boiling it all down, what's the ultimate takeaway for our listener here?
Well, the biggest hurdles are probably, first, just maintaining operational excellence at this new, much larger scale. That's hard. Second, integrating BlueHalo's very diverse tech and culture seamlessly. That's critical. And third, just staying ahead in the innovation race. Competitors aren't standing still either. But the ultimate takeaway, I think, from this deep dive, it's seeing how AeroVironment isn't just reacting to current wars or crises. They are strategically repositioning themselves, aiming for sustained, long-term growth by aligning directly with the Pentagon's top priorities. Drones, yes, but also counter-drones, directed energy, cyber, all the stuff BlueHalo brings. They're really leveraging decades of R&D and their proven manufacturing skill to deliver systems that are battle-tested and, crucially, deliver them at the scale needed for modern conflict.
What a journey through the real cutting edge of defense tech. AeroVironment's recent performance, these strategic moves, it really shows how innovation, smart acquisitions, and focusing on critical military needs can just fundamentally transform a company. And maybe the sector, too.
Yeah, and if we pull back, look at the bigger picture here, it brings up a really important question for you, the listener, to think about. As companies like AeroVironment keep pushing the boundaries of autonomous systems, precision strike, how might this constant drive for innovation fundamentally change global security? Not just for militaries, think broader. What about civilian infrastructure, international relations? How does all this reshape the strategic landscape for everyone?
A really thought-provoking way to end our deep dive. Thank you for joining us on the deep dive. We hope you feel smarter, happier, and definitely richer in knowledge.